there's not a pause, there's an acceleration in our view. I mean, given the pact that was announced between NVIDIA and OpenAI, the importance of which we don't think can be overstated. I mean, this was for 10 gigawatts worth of AI infrastructure to be deployed. To put that into perspective, every gigawatt of AI infrastructure is a 50 billion opportunity. NVIDIA has historically captured 35 to 40 billion of this. So when we're thinking about the context of these deals being announced just over the past couple of days, OpenAI actually came out and said this is actually, we need 3 orders of magnitude more than this to complete our ambitions in both consumer and enterprise AI. We think we're actually poised for an acceleration from here. Any digestion in stock prices right now, probably quite healthy. We've come quite far from those April lows, and we've certainly got our shopping list ready to be topping up those opportunities. But also NVIDIA. And NVIDIA's networking business, we think, is actually the most underappreciated component of their growth story going forwards. Not all customers will want complete vendor lock-in, but this is now the fastest growing component of their data center business because they've got the best product on the market for scale up and scale out networking in the data center. It's 14 times faster than the industry standard. So we think that this networking fabric of theirs, it's called NVLink, this could possibly be as big a moat for them as CUDA over the next couple of years.
But meantime, NVIDIA is lower, despite a bullish note from Barclays, which reiterated the stock at overweight. They also upped their target price to $240 a share. It was $200 prior. That's among the highest targets on the street right now. Barclays says NVIDIA will be a big winner from AI deal making over the next few years. Those shares are still down about 1.25%.
And then suddenly Oracle comes, and where are they going to get all the money? Well, they're going to get it from OpenAI, but where's OpenAI going to get all the money? They're going to get it from NVIDIA?
Right. They're getting it from NVIDIA, from endless raises of capital, conceivably from, I mean, Sam Altman's going anywhere and everywhere to get the money. Because he's saying it's not hundreds of billions, it's trillions.
I know. Well, that's why
that will need to be spent to build the data centers that they can run all their
right. But that's what made people nervous.
Programs.
Because we don't want, if you're someone like Hal, who's stuck trying to figure out what to do, and he looks at the stock market and he sees that companies are talking about trillions. That's difficult.
Right.
Because what that says is there is a bubble, conceivably, because we finally have outside money, and Oracle doesn't have the money.
Investors were willing to immediately award, like, let's say it was $60 billion over 5 years. It's going to go to Oracle to build the data centers from OpenAI. That's the $300 billion. And then, I don't know, where are there, 20% EBITDA? What are the margins on that? Something, AWS margins are much higher.
But the margins, right.
And then you put a 25, so that's $12 billion, and then you put a 25 multiple on it, because that's how much market cap it accreted in day one. Now it's come back a bit.
Well, look, this is what I said. All I'm saying, Carl, I'm just saying that things got a little too speculative. Things got a little too frothy. We're going to take the froth out of the market. Maybe we stop talking about a trillion here, a trillion there, and after a while it starts adding up.
What's been a blockbuster few days of headlines from NVIDIA, as you probably know, planning to invest up to $100 billion in OpenAI, this new partnership with Alibaba, Stargate bringing its first U.S. data center online. As all these questions begin to swirl about whether there is, in fact, a circular economy forming within AI, joining us this morning with his outlook is Tusk Ventures founder and CEO Bradley Tusk. Bradley, it's good to have you. Thanks for the help today.
Yeah, thank you for having me.
So that word, I mean, if I hear the word vendor financing again, people are going to lose their minds. I mean, what do you make of this debate? Is it worth having right now?
I mean, at least maybe I don't understand what a circular economy is, but when I've seen it in other forms, like for example, it's a big thing around recycling and sustainability and all of that. It's usually that a product then has further utilizations in different types of markets. Not just that the companies all working on different pieces of the same thing invest in each other. To me, redundancy might be a word, defensibility might be a word, but I don't, at least in the way I understand circular economies, I don't think this applies.
Right, but I mean, you've heard the argument that you never want to be paying your customers to buy your own products. The idea that NVIDIA has been acting more like an investment bank lately than simply a supplier. How do we get around that?
I mean, I think you got to take a step back, right? Well, the question is hundreds and hundreds of billions of dollars are being deployed into all of this. And the reality is it's too much money for any of these entities, whether it's the GPU makers or the AI companies itself or the data centers or anyone else, to do on their own. So they all have to find different ways to kind of come together to do it. And look, if the investments pay off and if AI is what they think it will be, great. But I don't think it's unreasonable to say, does it make sense that, $450 billion right now is being invested into AI infrastructure? And is it possible that we're overdoing it? I mean, we are not an economy or a society that is, invulnerable to fads and bubbles and everything else. And so I just think that even before we get into like the SPV structure of these deals, I think it's worth at least taking a step back and just making sure that all of the enthusiasm that's out there is 100% warranted, not just based on share prices, but based on actual unit economics and possibilities.
Well, how do we do that, Bradley? I mean, we listen to the experts like Jensen Huang and Sam Altman, and they tell us it's all warranted.
Well, right, but the experts there are all highly incentivized to do that, because if they can tell you it's warranted and we all agree, that lifts their price, which lifts each of their net worths a lot, right? So I'm not sure they're unbiased actors here. I would imagine, and this is sort of usually part of the value of having an independent Fed and independent Department of Labor and independent, experts in general that are obviously under attack right now. But we should have third parties who can really look at this and say, if $500 billion is invested through all these different means into all these things, will there be demand for it? Will there be the products for it? Like, I think we all agree that, one day AI will be this incredible thing, but that's very different than putting dollars into it right now. They're in so deep, they can't help but keep doing it. So if anything's circular, it's them because they need to keep it going. But I think part of the reason I watch CNBC is to have people who can sort of think independently and say, is this ultimately a smart thing to do over the long haul? And it might be, but I would feel a lot better if I was hearing it from someone other than Sam Altman and Jensen Huang.
Yeah. Well, what are you hearing? I mean, you guys are invested in a lot of these in AI adjacent companies. I think you're de-SPACing a robotics AI company. You've announced that. What do you hear about the potential payoff and the market size?
I mean, the way that we look at it, at least, is not one of these like, in 20 years, could this be a thing? But are there applications of AI that this company can use right now that can be profitable? So, for example, Kodiak, the company that de-SPACed this morning, is an autonomous trucking company. They already use AI to be able to send really big trucks with lots of cargo, very long distances, and people pay them for that opportunity. The U.S. military is one of their biggest customers. So in that case, yes, it's real right now. But if there's a paying product that people want to use that's with AI, to us, those are good investments. When it's just based on the theory and hope that the hype will be justified, at least for me, I'm not comfortable putting my money or my LP's money into that.
To wonder what you make of some of these deals that the White House has been signing, for instance, for NVIDIA to do business in China and to take a cut of the profit.
So if I look at that, that is just, again, it's the government's engaged in picking winners and losers. And we should tread carefully on that water. In fact, we should just stay out of it. That's where the crocodiles live. Because what would happen? Well, now you're going to end up in if you're out of favor with the next administration, what will they ask you to pay to do business abroad? Right? Like with each administration, are you going to find corporate America having to cut new deals with the new administration about their terms of business dealings abroad? And then all of a sudden you go from, why is Jensen so successful? Because NVIDIA is so damn innovative. But the core competency won't be that you can drive innovation. It's that you can drive the right favors from DC. What about all the deals that NVIDIA and others are making? You started by talking about the excitement. And at the same time, yes, the Chinese response to all this, well, actually, we don't want your chips now. Right. Right? Look how it backfires. You think that that's backfiring? You think 100%. That's dangerous? When China says we're going to double down. You want them to have our chips? I'd much rather have them use American chips than Huawei become a real competitor. 100%. I'd rather see NVIDIA chips used by every country in the world than to see Huawei take South America, Africa, and Asia with it. I want to see American businesses win.
Well, that has been what the administration is trying to do, right? That's why they lifted some of the export controls on chips.
Well, then they turned around and said, you're going to pay a special payment to DC to sell the chips. And look where we are today.
Right.
Right?
There's been a lot of talk this week about the circular model of AI that NVIDIA is handing $100 billion to OpenAI, that OpenAI is then planning to hand right back to them for chips. There's concern about OpenAI being this epicenter of the entire AI trade, also making it a single point of failure. Now that you are part of that ecosystem, how do you protect against it?
Yeah, so Databricks actually hosts, and I think we are the only platform that actually hosts all three major models. So we now have OpenAI, which we're very excited about. We announced earlier that we also have Anthropic on the platform in a similar vein. We also have Gemini models from Google natively. So any customer of Databricks, they don't need to worry. It just works inside of AgentBricks. So there is redundancy already across those three for us. And I wouldn't worry too much about, there's the press and what people write about and the headline numbers. And then there's the fact that we actually will need inference capacity going forward. There is going to be more inferencing done, people using LLMs, right? We're like in the early phases. Not every person on the planet is using at the fullest capacity these AI models. So more capacity will be needed. I can't comment on the exact investment here and there and how we're counting to get to those big numbers. But I think we need the hardware to be deployed around the world.
I want to look at this NVIDIA story that's evolving people have been kind of talking about NVIDIA financing for a while, but now we're starting to hear more of it. The Journal had an article saying they had too much money. And of course, now more and more people are saying they're kind of using financial gimmicks that we saw back when the tech bubble, right before the tech bubble collapsed. Just your thoughts about NVIDIA, which is obviously at the center of all of this.
Well, Charles, history does often rhyme, and these are some of the tactics that we did see in the dot-com era. We even saw some of this. I mean, Palantir used to invest a little bit in some of their customers back in the 2020, 2021 boom. And so this is kind of a common tactic. I think there is some nuance, though, that's worth exploring, at least respecting as it comes to NVIDIA. For them, they are going to generate north of $15 billion in free cash flow per quarter over the next few years, probably even much more than that. And so they've got a lot of money that they need to put to work. They could buy back stock, they could issue a dividend, but in the era of AI, I don't really think those are great capital allocation tools for a company like NVIDIA. To make a real investment, they have to do something big. And the only big things they can do are invest in their customers right now. So I don't think it's this nefarious circular thing that some people are painting it out to be. I think it's just that they have a lot of capital to deploy, and they think it makes the most sense to invest in some of the biggest players in this AI boom that they're supporting.
All right. Hey, it makes sense when you say it that way, and I've kind of felt that way as well.
By the way, Charles, I think we will get a bubble. I think it will be bigger than what we saw in the dot-com era because AI is a much bigger opportunity. In terms of where we are, I mean, we've sort of debated this internally several times. You call it the third or fourth inning. My gut is we still have another 2 to 4 years of continued pretty aggressive investment into infrastructure, and then some of the enterprise coming in, either building their own AI tools or adopting software from third-party providers. I still think we've got more run probably than most people think, because I've seen a growing chorus of people saying, hey, it's the top. I think they're going to end up being wrong.
All right. And let's take a step back. In the dot-com bubble, there was a huge amount of capital that flowed into what today we refer to as the internet. Now, the true winners and losers were not readily identifiable at the start of that whole bubble. But move forward 10, 15, 20 years later, there's no doubt that the world was radically transformed by that moment in time.
All right, that's Ken Griffin. Now, let's welcome in Fundstrat's Tom Lee, a CNBC contributor. It's good to have you back. I know you love this trade, but what do you make of what Mr. Griffin had to say?
Well, I agree with him. We're in a period where there is a super cycle and exponential growth opportunities within AI. But it doesn't mean every company that has elevated valuation today deserves to actually have the capital, and that company may not even reinvest that capital properly to be a survivor. So I agree there is going to eventually be a shakeout, but I think valuations, strangely enough, are actually pretty reasonable today compared to 1998. Because, 1998 was that liftoff point before that final 18-month surge. And I'd say the best benchmark is NVIDIA trades at 26 times forward earnings. Cisco at that same exact moment was at 60 times, and Cisco's PE peaked at 210 times forward earnings. So NVIDIA to me is still a bargain at 26 times. It's cheaper than Costco and Walmart, which are close to 50 times forward earnings.
Sure, but all valuation isn't created equal. And I'm not especially clear as to whether Mr. Griffin looks at the valuations of an NVIDIA, for example, and says, well, that looks a little out of hand. It reminds me of late 90s activity before the dot-com bust happened, as much as he looks at other names which have gone, parabolic and they're related to AI. And that's where he says, whoa, 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 whoa. We're placing way too many bets on what might happen in the future. We think we know what's going to happen in the future as it relates to NVIDIA and some of the other hyperscalers, but it's a whole host of other names that have literally ripped over the last 3 months, at least, that might bring investors a little bit of pause.
I think that's correct, Scott. There's a difference between a company being scarce in the public market. Like, let's say there's an IPO of a company and it's the only way for you to get exposure, versus that company being truly scarce to the ecosystem. So I do think investors have to discern, is this company going up a lot because this is the only name out of a possible bevy of private companies, or is this the company truly unique and one that is so scarce, I got to give it the N=1 valuation?
I mean, I think he looks also at a stat like JP Morgan Asset Management's Michael Sembalist brought to us today from his report. And he's good at what he does, okay? Quote, AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that would be what you'd expect to be the first wave of investment and spending, is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
I mean, I look at a stock like Oracle, for example, only to pick it out because it's up more than 30% this month. Now, it obviously had the moment around earnings where it added such a tremendous amount of market cap after that event. I bring it up if only because it was initiated sell today at one firm on Wall Street, in part because they suggest that you've got some really aggressive assumptions that are coming with this stock. Now, it's down 5% today because a lot of these names in what you would consider the momentum basket have rolled over a little bit. But the notion that the assumptions are so big that there's inherent risk in and of itself within that.
Scott, I think that there is going to be moments where it feels like we're possibly topping, and today is coming at a time when we have this Oracle report and stocks are generally soft. But number one, I think it's always really healthy to see corrections in a super cycle. But I do think it's really difficult for someone to actually ring the bell at the top. And in fact,
of course, always.
Yeah, like if we look at Palantir or Tesla or NVIDIA, I think that there have been, 25 bell ringings at the top at every waypoint along the way. To me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements and they go down and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market. And I do think it's healthy to actually see the skepticism. So I'm not opposed to seeing like these reports, but it's healthy. If we think about where, again, market valuations are, I'd be very concerned if the most important stock like NVIDIA was trading at a multiple that couldn't deliver returns. But it's the most important company in the world, 40% plus revenue growth. It's trading at 26 times forward earnings, which is hardly demanding for a company that makes a product that every single company in the world that is involved with AI actually needs. They can't replace it with anything else. So I don't think it's expensive.
All right, I hope you're all doing well today and staying calm in this market. Today, we saw many growth tech stocks get hammered. We also saw much of the broader market trading lower due to multiple reasons. NVIDIA finished the day just slightly higher, which is not bad considering today's red action in many AI tech stocks. Many stocks like Iron Core Weave and Nebius traded lower today. That was due partially to CIFR moving lower on the announcement of a new offering, and also due to the overall hit to speculative tech stocks today. I'm still bullish on Iron over the next 1 to 2 years, and I seriously encourage you to research this company. After earnings, one of Iron's co-CEOs basically said that he can't think of any reason for Iron to do an at-the-market offering right now, since they are able to lease 100% of their GPU costs at attractive single-digit interest rates. One of the things I like about Iron is that they are primarily funding their AI expansion through non-dilutive financing. I encourage you to research Iron if you haven't already. Really quick, I want to mention that OpenAI's Altman posted on X this afternoon saying that OpenAI is launching Pulse. According to Sam, you could think of this as a super competent personal assistant. Pulse will work for you overnight and then provide proactive recommendations that it thinks you may be interested in. This is a notable shift wherein the model is no longer simply reactive to your prompts, but is instead proactive and extremely personalized. This will necessitate much more compute from NVIDIA. Now I've got to once again address the whole vendor financing situation, as it's being talked about so much in the financial press right now, and it's on many investors' minds. I'm going to recap what I've said recently on this topic, and it's very important given NVIDIA's recent $100 billion investment in OpenAI to deploy at least 10 gigawatts of NVIDIA systems. I can understand the concern that some people have given what happened during the dot-com era. At the same time, I think there are fundamental differences between what happened back then and what's happening now. I want you to think about this for a second. Imagine you are in NVIDIA's position. You have more profit than you know what to do with. You just approved a $60 billion share buyback that's in addition to the $14.7 billion buyback that already existed. And now if you're NVIDIA, what do you do with all of this extra money that's at your disposal? Ideally, you would look for very high probability, strategic opportunities to deploy that capital and gain a return on that capital for your shareholders. Now consider OpenAI. ChatGPT has 700 million weekly active users. It is the fastest growing software product in history, and demand for that product is showing no signs of slowing down. And so if you're NVIDIA, why would you not deploy some of your capital, invest in OpenAI, and presumably get a nice return on that investment? It seems fairly straightforward from NVIDIA's perspective. And an added benefit for NVIDIA is that some of the capital they invest in OpenAI will be used by OpenAI to purchase more hardware from NVIDIA as OpenAI scales to try and meet extremely strong demand from their users. Listen, I understand the concerns whenever we hear about vendor financing, but I do not think this investment in OpenAI is a red flag. When I consider the investment from NVIDIA's perspective, it's very straightforward and it makes a lot of sense. Could this situation eventually devolve into something troublesome? Sure, that's possible, but I think that at the current moment, it's a virtuous cycle. I don't see any red flags of fraudulence or bubble-like activity. I see a clear, pragmatic business decision by the largest company in the world to put some of their profits to work in order to generate a greater return from that capital for their shareholders. This AI build-out is fundamentally different from the dot-com era because companies are not aimlessly building out AI infrastructure in the hopes of eventually finding a use for it or eventually finding demand for what they build. Rather, there are already many use cases. There's already extremely strong demand. And these companies are building out this infrastructure knowing that they're paying customers ready and waiting for that capacity to come online. That was not the case during the early days of the internet. Looking ahead, we have NVIDIA GTC in Washington, D.C. with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any potential sovereign AI deals with the U.S. government or large-scale projects with U.S. companies. I say this because the event is being held in D.C. and Jensen usually announces projects that are unique to the region wherein the GTC GTC event is being held. I also hope we'll get an update on NVIDIA's progress in quantum computing. And Jensen told us on last month's earnings call that he is anxious to share more details about Rubin with us at GTC. I honestly think we are still in the early days of AI. I expect both AI demand and the development of new use cases to increase over the coming years. And it's important to remember that the development of new use cases will almost certainly lead to a greater need for compute from NVIDIA. NVIDIA has massive growth opportunities ahead that are in addition to their data center business, opportunities that they are really just starting to capitalize on. These include sovereign AI, enterprise AI, AI native startups, physical AI, and quantum computing. NVIDIA is actively establishing themselves as the underlying foundation of both physical AI and quantum computing. I don't think these growth opportunities are being adequately factored into most analysts' long-term estimates. As I've discussed in past videos, I think there's a very real possibility that NVIDIA's physical AI business may eventually be larger than their current data center business, which is crazy to think about. NVIDIA expects the world to eventually be filled with 100 million self-driving cars, billions of robots, millions of factories, and hundreds of thousands of warehouses utilizing physical AI. NVIDIA sells the hardware in the data center where the models are trained. Then the models are taught and tested within NVIDIA Omniverse. And then NVIDIA enables real-time, on-device inference through NVIDIA AGX. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they are establishing themselves as the indispensable foundation underpinning all of it. Again, I think physical AI may eventually be larger than NVIDIA's current data center business. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.